Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This is where we get everything you need to know in 90 seconds at 9 o'clock. With news, there are signs the global rush up of producer prices may be exhausting itself. But first we start today with better than expected jobless claims data in the US. The number of Americans filing new claims for unemployment benefits fell to 256,000 last week, the lowest since March 2020 and well below market expectations of 300,000. And this is all happening as the number of job openings stays close to record highs as workers try to find new jobs with better pay, working conditions and flexibility. Meanwhile, the Philly Fed factory survey slipped back and by a bit more than was expected. Also, there was an unexpected jump in the number of existing home sales reported in the US for September. In China, the logistics challenge of getting goods out of the country continues, but is a uniquely Chinese problem as freight rates show. Overall, however, containerised shipping rates are falling now, only distorted by those ex-China rates. And the Baltic dry bulk freight rates are falling now too. But the logjams at US ports remain severe and are impacting goods availability for the upcoming holiday season. The US is considering deploying the National Guard to provide the resources to clear backlogs quicker at their end. In South Korea, producer prices are still rising at an unusually strong pace, just like most other countries, but the September data suggests that this trend is probably topping out and not getting worse. In Australia, it's becoming clearer that the sharp drop in China could lead to a sustained drop in commodity prices that may in turn mean a below-trend growth for Australia, with a sustained period of weak employment and wages growth there. One mineral, however, in hot demand right now is lithium carbonate, and mining giant Rio Tinto is forecasting a huge shortfall over the next 30 years. And staying in Australia, the head of their tax office, the ATO, has said they're hunting for more than $33 billion in missing tax from various dodgers, including $2.6 billion by large corporates, $12.5 billion by SMEs, and $8.4 billion from wealthy individuals. The US Treasury 10-year yield opens today up 4 basis points at 1.68%, and the price of gold has slipped $6 to $1,781 an ounce, probably the currency effect of a rebounding greenback. And oil prices are slightly lower today, down $1.50 a barrel to just under $81.50 a barrel in the US, while international Brent price is also down to just under $83.50 a barrel. And the Kiwi dollar opens today down 40 basis points to 71.6 US cents as commodity prices take it on the chin today. Against the Australian dollar, we're also a little softer at 95.7 Australian cents, and against the euro, we're lower at 61.5 euro cents. That means our trade-weighted index starts today just on 75, but still well above the top of the 72 to 74 range of the past 11 months. We welcome your feedback on these issues. Leave a comment below or on our website. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.